Hey, what's up, guys? Sam here, and I'll be doing the premium video for Friday, October 24th, 2025. So, yet another week is in the books, and it was a decent one. Most of it came in the last day of the week, which is today, and it's setting up a situation which is very interesting going into next week. So, next week we're going to have Fed, and then at the end of the week, we're going to have the meeting with China. In my opinion, the meeting with China is more important because a lot of what the Fed is going to do is already known. I don't think they're going to surprise. I'd be pretty surprised if there was a 50 basis point cut. The market's basically pricing in for sure a 25 basis point cut. So a lot of that I think has already been priced in, but the meeting with China at the end of the week could be interesting. Let's try to focus on this video on the technicals, and we'll see how that kind of shapes up going into this. It's an interesting spot as well before we dive in here with SPY, because everything looks so good that it's one of those things like, well, we have this kind of running joke here that when something looks perfect, we always say, I can't wait to see how it fails. And this is kind of one of those spots. So let's go through the video here. Let's look at everything that we normally look at. It might be as good as advertised. We'll know a lot more by the end of this video, so stick around to the end. Let's dive in here with SPY. So strong weekly candle there, made a new all-time high, closing above the range that we had been trading in, and it did so with a little bit of a pro gap where it gaps up above, and then basically anyone who is short or not long enough from yesterday is just getting kind of put into the vice, and they have to cover their shorts. The market really didn't do much today, right? It gapped up, and then for the last 5 hours it did basically nothing. And that can be a really terrible situation if you're short, because you're just waiting for a pullback that never comes. And in doing so, it creates this tiny daily candle, which, not my favorite, but it is a pro gap to a new all-time high, so there's nothing wrong there. The weekly chart hasn't changed, right? Even through all of this and all of, anything else, the weekly chart has not changed, so there is a positive there. One update that I do have for you from the last time that we spoke was that this cancellation of the buy signal did almost immediately come back this week. You can see there that basically this gave you a buy signal back here, and it was pretty decent buy signal, I would say. Kind of took you all the way up, and oftentimes this would have reversed the buy signal, but not in this market. This market says it wants more, and now what do you have? Well, for the first time you have a really well developed squeeze on the daily chart, and you do have a combination of positive signals that results in a max bull chart. So not a lot of nuance to it so far. New all-time high on the weekly, bullish signals across the board, all of the good stuff. So let's go to the NASI, and we always spend a little bit more time on SPY because SPY is kind of a catch-all for everything. And then we can spend a little bit less time on the rest of it. So here on the Qs, same thing, right? No major difference. I can even basically use the same notations from the previous chart. So there's no major difference here on the Qs as well. Yeah, I mean, really, as long as it stays above this gap from, let's call it 610, which was your resistance level. As long as it stays above 610, it should be fine. If at any point it breaks 610, I think that's actually a major issue. So what I would do if I were you, or at least what I'm doing, and you can choose to do whatever it is that you wish, is leave an alert there at 610. And as long as price is trading above that, you have to treat this as a bullish market, which it clearly is. And the daily squeeze here on the Qs is quite decent, so that looks good as well. Let's go to the IWM next. We'll speed through the rest of this. There's not really a ton of nuance on the indexes right now. The only concern that I have is that everything looks so good, but think about how weird that sounds to say out loud. In what other profession or in what other part of life do we ever say something looks too good and that's a concern. But here on the IWM, it's actually the weakest one of the bunch, just by a little bit, because it doesn't have its arrow here quite just yet. Very well developed daily squeeze, 4-hour squeeze, all the good stuff. So not a whole lot to cover here. I think as long as this stays above the previous high, which is basically 245, I don't see any major issues here on it whatsoever. Let's go to HYG, which is next. HYG is a proxy for risk appetite. So whenever I look at HYG, I prefer to not look at interest rates as just one thing. So, for example, if I were to tell you interest rates were going to drop next week, is that bullish or bearish? You really can't tell me. You can kind of imply, someone could imply that would be a bullish thing, but there are times where interest rates drop for bad reasons. So the way to tell is to see what HYG is doing, because if HYG looks good, then that is a bullish signal overall. So that's why we look at HYG here, and this looks very serviceable to me. Got into a little bit of an issue here last 2 weeks, but so far it's recovering well. You do have bull slingshot here as well, which is one of the stronger signals you can have. And the bull slingshot happens right here, where you give a down arrow, and then within 1 to 2 bars you get an up arrow, and then that launches you higher, which it's trying to do. So this chart is back in the bull camp. It's not as bullish as it's been, but it definitely confirms what we're seeing in the indexes. And what I mean by that is, for example, if I had pulled up HYG here and it was down today, I would actually be a little bit more cautious. But the fact that this is up so far bodes well. As long as it doesn't take out the low at 80, I think it's fine, and that is a bullish signal. Just real quick, I'm going to look at the dollar. Not that this necessarily matters, and really not that it's done almost anything, but just out of pure courtesy, I will look at the dollar here, and pretty much just a whole lot of nothing. It is trying to set up a little something here, like a little base, but at least so far I don't see much of a concern with this. So we'll go ahead and move right along. Let's look at the VIX next and the VIX products, and then we're going to look at the individual sectors and see what's lining up here. And then I'll show you a couple of decent looking charts that I have. So the VIX is next, and the VIX had its little pump and its dump. And what's interesting is now the VIX on the weekly chart, it's kind of starting to inch closer to that time frame that I told you to be a little bit cautious about. So one of two things happens next, and usually that means you're about to get a decent sized move in VIX. You see how the squeeze histogram has now finally almost gone completely neutral? We're probably about 1 week away from that being completely neutral. So we're about right here in the process, right? So I know not everybody watches every video, so I'm just going to quickly cover this. If the past doesn't necessarily repeat, but it often does rhyme. And if we're looking here, well, we can look back at previous times that this has happened and see what happened then. So last time was here, I would say, right? These two things kind of mirror each other. And one thing that I've been using as a timing signal is actually just the squeeze histogram. So you see how when the squeeze histogram finally went completely neutral and actually started printing a little bit higher right there, that kind of led to this giant spike up in VIX. That wasn't really a concern all through here because you're grinding back to neutral, but you're very, very close to being neutral. Pretty much next week it will be neutral. And then from there, maybe 1-2 more weeks, if past is prologue, then that would set something up there. So for now, it's not a huge deal, but I would kind of put this on your radar. While the market can go up, and ideally it does because I don't have any shorts, I want you to be aware of this signal for the next 3 weeks. Fortunately, I'll be with you every Friday, so we'll have a chance to cover it. But this is a key signal that I think needs to be followed. It's not imminent right now. Again, I think this probably takes it'll take another week to get neutral and probably another 2 to 3 to go into this orientation. And then from there, we then have to then start looking at you know, some potential catalysts that could change things. For now, not a huge deal, but it is something that I think it needs to be watched pretty carefully, or at least I'm watching it pretty carefully. And then the VVIX here, which is the VIX of the VIX, just think of this as if VIX is velocity, this is acceleration, right? You can't get to a high velocity without going through an acceleration phase first. So of course the VVIX is very important for that. And here on the VVIX, kind of the same story. So that's probably ideally a conversation for the middle of, well, I'll speak my book. Ideally, that's a conversation for 2026. But at the very least, I hope it's a conversation not until, the 1st of December. Just get me through November expiration. So this is the indexes here, and we're just going to go through it real quick. This is something I like to do in the room sometimes. So you can see the squeeze there on the SPY is max bull. The squeeze there on the Qs is also max bull. The squeeze on the Dow is max bull. Very impressive. The squeeze on the IWM is only 75%, but still bullish, of course. And then what else is here? I don't see any other major squeezes. Most everything else looks okay. The RSP is lagging, which tells me that the focus is really more on tech. So I would remain focused on tech until proven otherwise, with the understanding that the IWM, if you start to get a short squeeze, if the market starts to go parabolic off of this signal, the IWM will likely squeeze the hardest. But from a consistency point of view, what I look for is for the major index and its equal weighted counterpart to be the same. So you see how the Qs here is max bull with a squeeze, the QQQE is max bull, whereas the SPY, or the SPX in this case, is max bull with a squeeze, but the RSP, which is its equal weight counterpart, is actually not yet bullish. So that tells me that at least from a consistency point of view, tech will remain more consistent than the rest, but I do keep an open mind that IWM can outperform in the right market. So let me jump over to the sectors, because there was some sectors here that look pretty decent. I would say ARC, XLK looks good. XLK looks really good. And then there's a couple more here that I might not be fully aware of yet. So where do I want to be? Well, let's just go through the process here. So do I want to be in home builders? No. Do I acknowledge this? All this stuff could work, right? Like, for example, if the S&Ps next week, the daily squeeze fires long, there's a China deal, all the good stuff. Most things should work, but from a probabilistic point of view, let's just cross out what is not optimal here. So home builders, communications is suboptimal. Utilities, who cares? Staples, very much suboptimal. Industrials, while I recognize that is a very tight flagging pattern that can have a big move, suboptimal. Financials, very suboptimal. So what does that leave us with? Well, I would even maybe put XLY here, suboptimal for now. And that leaves us with SPY, XLK, ARC, and SMH. So what's the common thread here between all of these things? Well, this is the neighborhood, right? Or actually, SPY would be more like the city, and then the individual neighborhoods. What neighborhood you've chosen a city to move to or to live in. What neighborhood do you want to live in that city? And I would say probably for me, it's going to be this guy here, right? XLK, beautiful squeeze, high score. Obviously, the semis are just on fire, so even the fact that there's no squeeze there may not matter. And then for a little bit of kicks, maybe something like ARC as a proxy for all this stuff also makes sense. So write down XLK, ARC, and more of SMH. So with that, then we say, okay, well, we know the city is SPY. We know the neighborhood. Let's just use XLK. XLK is the neighborhood. What house do we want to buy in that neighborhood? We don't want to buy houses in bad neighborhoods, usually. So then we look inside this thing and say, okay, well, what do the houses look like inside of this decent looking neighborhood? Despite the fact that AVGO is is below the score on XLK. It's not a 90. I do think actually this works in a pretty big way. So this is one that I'm going to be watching. Obviously AMD is just a monster. No interest here in Adobe. Not a ton of interest here in CRM. Oracle, I think this one could work big, but at least right now it doesn't have the right signals. Qualcomm, not a bad chart. I'm going to cross it off just because it doesn't have a squeeze, and it's a stock that I don't trade that much. AMAT looks great here on a pullback, but I'm going to cross it off because it doesn't have a squeeze. Apple looks good here as well. NVDA, I think, is probably in play despite the fact that its score is suboptimal. This could very quickly change and get the slingshot squeeze. And then, of course, Microsoft here kind of setting up for a big pop after its report. We'll see if it plays through, but something needs to catalyze XLK, and why not Microsoft? So having looked at this, I think that in terms of like a standout winner, I could not really find anything that was as good as the index itself, or excuse me, the sector itself. So in this case, the sector is a 90 with a squeeze. Everything else, either A, doesn't have a squeeze, like AMAT, right, which is max bull, or B, it has kind of a suboptimal score, something like Adobe here, right? So I will not mind playing something like AVGO. I think this one plays well. I don't mind playing in Microsoft or NVIDIA, despite the fact that they have neutral signals. But here's kind of the thing. Because I couldn't find something, and what I'm looking for, just so you're aware of exactly what I'm looking for something inside of this that has a 90 or higher and also has a squeeze. And I don't see anything here that qualifies for that. Anything that's 90 or higher doesn't have a squeeze, and anything that has a squeeze is below 90. So in that instance, you just typically buy the sector, which in this case is XLK. Fortunately for market bulls, is if the XLK idea works, that pretty much means the entire market works, because this is probably the most concentrated amount of market cap of anything really, just with these three guys. So XLK is probably very, very high on my list going into next week. Just the cleanest thing that I see. So if we go back to the chart here, and we look around, there are some things that were popping up here. So just real quick, because last week we covered this stuff. So last week I gave you two picks. The first one was Google, monster day, monster week, nice breakout pattern, great base. This probably keeps going. This probably, unless the earnings is just terrible, which I don't think it will be, this probably keeps going. So Google was a good pick. The bad pick, SMR, traded pretty much as bad as it could today. It got up to 40 today and then sold off and actually kissed red for a little bit. This stock got wrecked on, what was it, Monday? Yeah. I bought it here on Monday. And yeah, the stock's just been super crushed. So can't win them all. I'm still actually in this position, but I am very much not a fan of how this is traded. Now, it's not specific to SMR because all of the momentum stocks got hit pretty hard. So SMR, Oklo, Palantir, Rocket Lab, all of them got super crushed. Like some of them got crushed like 50% off the highs crushed, including this one basically. This is from 57 down to 33 is a huge move. So would I still recommend this one? Probably not. Probably not. I would actually, and one thing that I'm going to be much better about these videos is actually just bringing you the big stuff. And the big stuff, kind of the place where everything aligns is not here, right? This is not an aligned part of the market. The alignment in the market is in XLK and in all the subcomponents. So I would absolutely look for that. And you can see here, XLK actually never even got a negative crossover on the trend oscillator. So you can look inside of XLK and try to find something that you think fits your trading plan. I think that's just fine. For me, I might trade AVGO. I might do NVIDIA. I might even play Microsoft for earnings, but XLK kind of captures the full spirit. So let's just kind of cover that real quick because I think it's a really important thing. Notice what we did. We started with the indexes first. We looked at the credit markets second. We did that through HYG. There's a lot of information found in HYG. It's a really concentrated source of information that works in line with what we're seeing in the indexes. From there, we said, okay, well, the indexes look good. HYG, the credit markets confirm that. What about the sectors? And so we then went to the sectors. We're looking for high scores with squeezes. The best thing that we found was XLK. We then looked inside of XLK, and at least personally, there was nothing in XLK that looked as good as the sector itself. So we go with the sector in that case. And if XLK works, that works great for the markets because that's a really big amount of market cap to move higher. So go ahead and wrap it there. Before you go somewhere else on the YouTube, drop us a like, drop us a comment, even if it is just to tell us what you're having for dinner. It does help us out with the algorithm. And then we'll come back next week. Next week is going to be kind of a big one because, of course, you have Fed, which I think is mostly priced in. I don't think the inflation stuff that much of a concern anymore. And then after that, you're going to have the meeting on Halloween, actually, with China. So that'll start to set up the move after that. And that should be a decent catalyst to see if that can spark all this up, or if this is just the ultimate rug pull. I don't think it is. I don't have any reason to believe that quite just yet, but it is a fluid market and a fluid situation. So I still prefer kind of quick ins and outs. I don't see setups here that justify going out a very long time. In my opinion, this squeeze that's developing on the indexes is going to be one of the last bull squeezes that we see. We'll see if I get to eat my words on that, but I think this is kind of the last hurrah, and ideally it's an impressive vertical hurrah, and we'll see if that all plays out. All right, guys, that's my time. See you next time.